What is up, crypto hackers? Welcome back to another episode of Hack Crypto, where we hack our NFT and metaverse education. If you guys are brand new here, don't forget to be subscribed. Hit that notification bell so you get notified when these new videos go up. Smash a like if you like this type of content. And in this video, I'm going to be giving my take on the current state of the economy. I've gotten this question by hundreds of people over the last few months because things are heating up with the CPI coming out today at the time of recording this on Thursday, October 13th. And things are getting a little bit shaky. And a lot of people have been asking me my take on what's going on with the Fed, what's going to happen in 2023, 2024. Is this a Great Depression? Is this a recession? And I'm going to give you my take after seeing these numbers that came out today, with core inflation and headline inflation being way over the mark as to what people were expecting. I'm not the type of person to do any sort of fear mongering or anything like that. So I'm going to give you a real perspective on this. I majored in economics, and doing a lot of different studies around game theory in school was very fun. It helped me get into the crypto space and understand a lot of the underlying, foundational aspects to crypto. But ultimately, I do have hot takes on the economy as a whole. All right, so digging in here a little bit to give you guys some perspective as to where the crypto markets stand, where stocks stand, the housing market, the debt markets, everything stands. Now, with the CPI shooting way above what was expected today in the data, means inflation is sticky. That means that it is staying around, and at these elevated levels, it is alarming. And when that happens, the Fed needs to slow down the entire economy. And in doing so, that leads to layoffs and unemployment going up to what some are projecting to be 5% by the end of next year, which is a very high number. But when you slow down the entire economy, you are contracting the demand, slowing the demand for goods and services, and therefore people are making less money at their businesses and have to lay people off to make ends meet. This is sort of how that vicious cycle begins, where the labor markets are strong right now with unemployment at, I believe, around 3%, but shooting up to 5% by the end of next year is realistic. So to give you a quick take on what the past 4 months have looked like from an inflation rate perspective, in June of 2022, we were at 9.1% inflation. In July, we were at 8.5% inflation. In August, we were at 8.3%, and in September, we were at 8.2%. So core inflation rose to 6.6%, which is the highest level since 1982. And it's more than triple what the central bankers and the Fed want to see. The healthy, stable size of inflation is around 2% for any society. So it's 6.6. This really blew the roof off for the Fed, and they're going to be pissed. What can the Fed do right now? The Fed can raise rates and continue to raise rates. It's projected that by the end of the year, they're going to have two different meetings, one in November where they're going to raise it 75 basis points, and then one in December. I do believe that with the debt markets, the housing market, and the crypto markets, and the stock market, things are going to get rough. Things are going to get choppy for sure, because people like Jamie Dimon are coming out saying the stock market can go down another 20%. Now, currently, people are arguing that we are not in a recession right now because of what I mentioned, that strong labor market. People are getting employed, jobs are coming online, and people are still working. Now, as the slowdown begins and continues, I should say, the Fed is going to keep pushing the brake on the economy to slow us down. People are going to start laying people off, and that unemployment rate shifts up. And when that does happen, what we're going to see is a pretty deep recession next year, not a depression or anything like that. And with the CPI going up, costs are going up, and people are going paycheck to paycheck now that were not previously. If you're making six figures a year and you feel like all of a sudden you're paycheck to paycheck, that's because it was 55% of people in the United States going paycheck to paycheck, and now it's 60% over a year ago. So in a year, that paycheck to paycheck has gone up by 5%. The Fed came out and said, we actually got it wrong with how much people had saved up. Previously, they were really boasting about how much people were saving and how much they had saved as a buffer in the event of a recession. They came out and said, whoops, No, actually, there aren't as much savings and more people are going to be struggling. This is going to be bad for higher interest rates across the board. This is going to be bad for the cost of goods. So when you go to the store, the goods are going to go up. Price of gas will go up. The price of energy will go up. But if you're renting right now and you aren't buying a home, which is a lot of people are saying, I cannot afford to buy a home, I need to go rent. Rent is going to go up. That is just how it works because you have insurance companies, you have property taxes, all of these things ratcheting up in the background. So therefore, you have an increase in rent. People aren't buying, they need to go rent. That increases demand for rent. Therefore, you get a demand bump, an increase in the price. So what does this mean for the crypto market? For everybody that's been watching this channel for a while, I'm not a trader, I'm a buy and holder and a founder. So those are my two key ingredients to crypto, where I build company, I build my portfolio by just buying on a regular basis. Those are the two ingredients that I use, and I recommend that anyone that's watching this, not financial advice, but that's something that is proven time and time again. If you just hodl and hold on tight and ignore the price as best you can, you will be okay long term. Now, of course, this has been in a huge bull cycle that Bitcoin has existed and crypto has existed. So it is ups and downs within a bull cycle. Now, a deep recession, that is something that's uncharted waters here with the crypto markets. We don't know what that looks like, but time and time again, the crypto markets tend to surprise. They tend to pull back more than what you had thought. So more pain than you could have imagined. That happens every single 4-year cycle, but we haven't seen a full-blown recession cycle happen for the crypto market. So with people like Jamie Dimon coming out saying the stock market will pull back another 20%, and people like Paul Tudor Jones, really famous investor, he said basically if the Fed doesn't keep going, it's going to create more issues. So inflation is like toothpaste. Once it gets out of the tube, you can't get it back in. It's from Paul Tudor Jones. And a good rule of thumb, according to Paul Tudor Jones, is having under 2% inflation allows for a stable society. And that means we're going to have to go through some short-term pain for long-term gain. And if we don't, and we avoid that and we do short-term gain, we get long-term pain. So the Fed has to pivot. They're going to have to make their decision. The debt markets are going to get hit. The housing market's going to get hit. The stock market's going to get hit. And of course, the crypto markets are going to get hit because everybody wants to be in cash. Every country is sort of abiding by this US dollar milkshake. An insane data point that came out is that every percentage point that the Fed increases the rates, they are impacting 0.8% of different countries' GDP and their output, which is wild to think about, that every single move up, we are hurting these countries on a multi-year basis. I think that was a 3-year time window was what the UN said when they reached out to the Fed and said, hey guys, you need to cool it with these rates. You're crushing other countries. And Jerome Powell, the head of the Fed, was like, oh no, we're going to keep going. We have to keep going. And it's not our job to monitor other people's economies. So what you have is a situation where everybody's trying to get into US dollars. Their markets and their GDP are going down because we are slowing everything down to not a screeching halt, but slowing down enough that we inflict pain throughout all of these markets, even more than are already here. And I think that it is going to be a rough ride for sure for the next year or so, but this is just a recession. This is not a Great Depression. There's going to be a few things that break, a lot of bankruptcies. I saw Elon talking about that, a lot of bankruptcies incoming. But the best thing to do is to hodl. It is important to make sure that you're covering your costs, spend less, tighten that belt, and make sure that your income is higher than your expenses. And the way to do that is through budgeting. There's a lot of great budgeting apps out there. I'll put a couple in the description. And for crypto, I think it's very important to keep in cold storage, in Ledger, Trezor, anything that is cold storage. Make sure that you are holding on to those keys in a cold wallet, because in this situation, people's balance sheets get crippled and people go out of business. Centralized exchanges are going to get hit pretty hard here. especially because they're holding these huge bags of volatile crypto assets. And a good rule of thumb in every bear market is 90% of altcoins collapse because everybody's dumping them to get into stables, get into Bitcoin and Ethereum and these top market cap ones because they're more secure. And what that means is that the centralized exchanges have a very large spread across all of these small altcoins that are going to go to zero. And you have a very difficult situation for them, and it's best to keep in cold storage. So that is it for this video. It is a video more on the educational side for the economy as a whole. I threw a lot at you guys there, and I'm going to be doing more of these types of videos as we enter into this full-blown recession here. So definitely be subscribed to the channel. And I like to do a lot more of these macro concepts because it's what I enjoy talking about a lot. And I think that this is very correlated to the crypto markets that a lot of people that are subscribed to this channel like. So that is it for this video. Slap a like, be subscribed, and I will see you guys on the next episode here on Hack Crypto.